Hey, it's Michael Saul, but everybody calls me Tiny, so you can too. And this video is Merry New Year, market analysis, and 2 biotech stocks to watch. This is for the week of January 2nd, 2017. Hope everybody had a wonderful holiday. Let's take a look at what happened the end of the year. So the market, just a quick review, had been up since right the day before the election. A little pause here, right end of November into early December. Then we pushed through, and from there started a pullback. Now the pullback, in my opinion, is nice and orderly. I sent a chart of this and did some commentary to my email list, which you can join at attackthemarkets.com. Don't worry, I'll remind you about it later on in the video. And the end of the year, we saw this kind of big candle relative to the last, I guess, couple of weeks, but it wasn't that big in the grand scheme of things. And then a little pause, and then Friday, there was some tax loss selling. I talked to a couple of people who work on the street, and they were saying overall it was light volume, but there appeared to be some tax selling on Friday, which makes sense. Now, you can see this pattern I have drawn in. I had it drawn in before Friday's session, and you see that we still held the bottom of the pattern even though we broke through. So let's start with the S&P 500 here and look for support points. You have 222, and then you have this 219, 50 to 60 area with the 50-day moving average that's coming up right in between, right? So you have these two little highs that are only about 10 cents apart. And then you have the 50-day moving average. So if it gets through 222, by then the 50-day should be above that. And I'd be looking, not above 222, sorry, above this little resistance area. So I'd be watching that for potential support. Now, in my opinion, I don't think we get a huge correction here before we turn and move higher. I believe that we're going to go up at least one more time. I don't know how far we're going to get. I'm not calling for this huge, crazy move here, but I do think the Dow is going to hit, there we go. The Dow is going to hit 20,000. It came just shy. Okay, the highest it got to, I believe, was this 1980, basically 88. So I just think it's gonna hit it. I think that this is a nice pattern. We had the impulse up and now the pause. So I do think we are going to see a move higher, but I want the evidence backing it up. I want to see if the buyers are coming in at the beginning of the year here and looking to get this going again, get this trend continuing. Pullbacks are healthy in a bull market. They allow those that missed but don't want to chase an opportunity to get on board. They let the market breathe if you want to look at it from an esoteric type of move. But you know what you want to see is you want to see, in order to define a strong market, is you want to see volume come in as the move is going higher, right? Or if it was a down move, same thing. You want to see the volume come in on the extension. On the consolidation here, you like to see volume and range dry up. So let's see what happens here. Let's see if we could turn here. I think we're gonna. Dow, like I said, looks the same. The Russell, nice tight pattern here, and the mid caps as well. So the Russell, the mid caps, the Dow, and the S&P all look like they want to move higher. Again, I want to wait for evidence. The NASDAQ, I mean, it's definitely not as clean of a pattern, but it doesn't look terrible. Yes, we did poke to new highs and get some selling back down, and now we're back inside this big range. The NASDAQ lagged most of the year. I mean, there were certain times when the NASDAQ outperformed, but for the most part, it lagged. A couple of stocks in particular, like you look like Facebook, still had an up year for 2016, but look at this pattern under the 200-day moving average. That doesn't look so great. Here's Alphabet. I mean, again, believe it had, let me make sure because these are kind of stocks that I really don't, I mean, I watch them as bellwethers and leaders, but not really trading these. But yeah, you can see Google, Alphabet, whatever it is, had an okay year percentage-wise. I mean, I guess didn't outperform the market, but you could see it put the lower high in. Even like an Apple, again, yeah, I mean, it had an up year, right? So if you look, there used to be a way where I could just pick out what it was doing for a certain time period. It slipped my mind how to do it. But it had an okay year, 8 points or whatever that is. I don't know, under 10%, but still. I mean, look, if that's the thing, right? All right, well, you could have done better with other stocks. Of course you could have. But if you compound this return, just what you got on Apple every single year, and I'm not saying that's what's going to happen. I'm just using the percentage of it, right? You have a pretty nice run over a set period of time. Okay, you'd be doubling your money every 9 years, eight years and change, whatever it is. So, but it definitely was not a screamer. Okay, definitely not a screamer of a move. Not something like Nvidia, right? Which just completely went hog wild. Even like an Intel, percentage-wise, right? So anyway, a lot of these stocks, here's like an Amazon, also didn't do too bad percentage-wise, but looked like it peaked early towards the last quarter of the year instead of late in the quarter. It looked like it peaked up before the election, and we want to watch what happens at the 200-day moving average. Financials, of course, had great runs. Here's Goldman, Bank of America, and these still look like when they are done consolidating, when they are done correcting, they look like the market, in my opinion. They look like they're going to move higher. Again, I want to wait for that to start happening. I don't want to guess, okay, we've stopped correcting, or okay, we've stopped going down. It doesn't make much sense to do that. All right, because, trends do change, trends do stop. Okay, right now, I don't see enough evidence to say that the high is in. All right, but again, let's see some evidence that the buyers are back. Okay, let's take a look at some indexes while we're here. Semiconductors back to the 20 EMA. Here's the Biotech. They look sloppy overall. They just look sloppy. They didn't have a good year. They look sloppy, and if you go to like a weekly chart, you could almost say that, hey, they topped out up here in 15, they came down, and then this is corrective, looking for continuation to the downside. I'm trying to get rid of this here. Okay, I'm not gonna do this now. All right, so it looks like this could be corrective, and that another push down to the 2,500, or to actually this weekly hammer down here at 2270.48 could be coming up on this. That'd be a pretty decent sized move here, percentage-wise. All right, let's look at the banks. I already showed you some of them, but nice and strong. Brokers. Okay, cyclicals. I always like to. I forget the. I forget the symbol used to pull out the cyclicals, but we can. I'll look at them in next week's video, I promise. Then you have some other groups to watch, like oil. Right, there's oil services. That had a nice pop up. I like to look at GLD when I'm looking at gold, or GDX when I'm looking at the miners. And the miners had a nice rip end of the year up until Friday, when they had that reversal there. Just still trying to get rid of this, see if I can do it. Delete, there it is. Here we go. So it had the reversal at the 50-day moving average. So is gold and gold miners, are the lows in? Well, gold, it started a little bounce too, but V reversals, they happen, but they're rare. What I'd like to see here is we come back down and test it, either put in a higher low, maybe an inverted head and shoulders, or we come back down, test the lows, even break them by a little, and then we start to move. But if this is the first spark, the first green shoot, whatever you want to call it, we want to watch to see a consolidation here and see if we can get continuation. All right. So again, let me review what I'm looking for. I am looking to see if the bulls, come in to the market. That's better. at the beginning of this year, or they're going to continue what happened the end of the year and continue to pull back a little bit. If that's the case, and we do continue to pull back, I want to watch these key support areas: 222, the 50-day moving average, this level here, the 219.50 to 219.60. These are the levels I want to stay aware of. All right, 2 stocks to watch for this week. Clovis Oncology. Looks like they are in a bull flag here with the sloppy base, broke out, now pausing. And then, I always spell this one wrong. Akebia Therapeutics. Okay, let's take a look at the chart on the longer term. It's in a big picture consolidation, but you can still trade the rotation. This was basically a base for the entire year. It broke out and now it's consolidating. So again, always have to wait for confirmation on either of these two, on any stock, of course, or anything you're trading. But on these two specifically, wait for the breakout and continuation there, and wait for the breakout and continuation on Clovis. All right. Any questions? Tiny@attackthemarkets.com. I am in wait and see mode here, but if the buyers come back in, they could want to press the issue and get the year started off right. Just pay attention to that and wait for confirmation. Talk to you in next week's video.